Foreign investments in Nigeria's telecom sector plummeted to $14.4 million in the third quarter of 2024, an 87% drop from $113.42 million in the second quarter, and a 77% decline from $64.05 million in the third quarter of 2023. This is according to the National Bureau of Statistics. While first quarter and second quarter saw significant growth, challenges like forex shortages, infrastructure deficits, inflation, and high operating costs now threaten the sector. Industry groups ALTON and ATCON urge immediate government action, warning of severe issues if these are not addressed. Well, joining me for more on this, I have Tajudeen Ibrahim, Director of Research and Strategy, Chapel Hill Denham Securities. Thank you, Tajudeen, for joining me today.
Thanks for having me on the show today.
Absolutely. Well, you've seen this. We're seeing a jump. Of course, we saw a jump in investments from 2023 to Q1 2024, which, of course, I would say, or many would say, is admirable. But then the trend of decline since the second quarter almost erases that feat. Why is this so, and what does it mean for the sector, really?
So, to put this briefly, the decline in investment is negative for the sector because it means that the sector is not really attracting foreign capital into the Nigerian economy. And, seeing a decline is sending a negative signal to other, global investors that may be interested in coming to Nigeria. And the decline that we saw is also indicative of the, challenges that we currently have in the Nigerian economy, ranging from extremely high inflation rates, insecurity, as well as the volatility of the exchange rate. I would say that, all of the reforms by the government seem to be taking a toll on the sector as we speak. And, the sector is sort of seeing a regulatory headwind in its ability to respond accordingly. So, largely speaking, I believe those are the drivers of the lower investments.
Well, looking at that, how can this particular sector be repositioned for, quality capital inflows, or is it that as it is, it's impossible for us to have that, that number that we're looking for? What are the issues here, and how can we address the current deficit in the sector?
So we're looking for, much more higher level of investment into that sector. I reckon that there should be a lot of, flexibility in terms of regulation. I noticed, for instance, that Starlink increased its, subscription prices by about 97% sometime in September and October. So, but eventually they had to suspend the price increase, largely because of regulatory intervention, because the NCC said that it is not consistent, with the rules and regulations in the industry, because Starlink as a player does not have the ability to decide a price increase by itself without carrying along the regulator and getting its approval. And the same thing is happening also to the other telecoms operators in the country, talking about MTN, Airtel, Nine Mobile, and also Glo. So there is need for some level of flexibility in terms of regulation on that front if we really want to attract the right level of capital. No doubt the regulator will be able to do some adjustment in terms of price increases. Nevertheless, I reckon that whatever the regulator wants to do should be accelerated so that there is no delay in implementation by the operators. Otherwise, we will not be able to see the right size of investment into the sector. According to Starlink, Starlink, for instance, said it will continue to provide high quality, high speed internet services, in Nigeria, but that is dependent on its ability to price, accordingly, to charge customers accordingly. If it is not able to charge customers accordingly, it means that it will not be able to provide the right level of, high-speed internet access, to customers. And that is one major thing that, we need in Nigeria. So I reckon regulation has to be, broadly speaking, be supportive. That sector, I say again, is the only sector in the Nigerian economy that has not been able to respond to all of the headwinds that we are seeing in the country in terms of high inflation rate and exchange rate as well.
All right, from what you said, I get a sense that maybe there's an ongoing conversation on all of those. But I mean, I just want us to be clear. What is the fear of the regulators? Because just like you said, we have so many sectors, whether it's the FCMG, where we've seen price adjustments just so that they can measure up with what's happening, the macros and all of those. Meanwhile, regulators are not allowing that to happen in the telecom sector. What is the challenge? What is the problem here? Is the regulator or are the regulators scared that these prices might not be fair on the consumers, or what are the things we actually need to put in place to ensure that, there is a balance here? Because on the one hand, operators need to make profits. They need to at least have a margin that's maybe not as profitable, but something good enough. And on the other hand, maybe the regulators are just generally trying to protect consumers. How do we strike a balance here? Is that conversation ongoing?
So it is more of the latter. Just like you said, the regulator seems to be protecting the Nigerian consumers. But the reality actually is that they cannot be overprotective. If I can put it that way, because the service providers are feeling the heat, and it is reflecting negatively in their financial performance, and they will not be able, or they will not be encouraged to invest more in the sector. And so I think, there should be a balance between much higher service charges and also an increase or an improvement in the quality of service that the telecom operators render to customers. If I see a better improvement in the quality of service that I receive, of course, I should be willing to pay more as a consumer. And I think the major thing is that the telecommunication sector is so sensitive, just like the oil and gas service sector is sensitive as well, because all the increases we have seen in PMS prices are currently impacting negatively on consumers' wallet. And if we see a similar increase in the price movement in the telecom sector, the impact will be tough on consumers. And I think that is what the regulator is trying to do. But I reckon that there could be like an agreement around a gradual increase in tariffs, and I reckon that could give consumers a bit of cushion in terms of how they fit the impact on their pockets. But to allow a jumbo increase in price may be negative, for consumers, and it will also be negative to the size of business that the telecom sector is able to do. So I recommend what I consider a gradual increase in tariff increases over time. I reckon that could be largely speaking friendly, and it will allow consumers to also plan in terms of expectations into the future about what the cost of telecommunication services will be to their wallet. I think all those could be useful.
All right. Well, as a consumer, one of the things I would say is what we have discovered so far is that the quality of, whether it's data calls or voice calls, whatever it is, the quality hasn't been as good. And we hope that this will be fixed. Away from that, I just thought to mention that because, you're speaking for, I don't know which side you're speaking for now, but it's fine. Now,
for both sides.
Okay.
I'm speaking for both sides.
You're speaking for both sides.
The service has to improve, no doubt.
All right. I'm glad you said that. The service definitely has to improve. Now, for a sector that's sort of grappling with infrastructure deficit, this decline we're saying definitely doesn't bode well for it. So beyond, capital importation that we are looking to come in, is there capacity in-house that can, not in-house now, within the country, that can actually plug these deficits that we are seeing in terms of infrastructure?
There is definitely capacity, internally in Nigeria to plug all of those deficits in terms of infrastructure. But I reckon that the authorities have to look in the right direction if the authority, for instance, looks in the direction of capital markets, I believe that, the bulk of our infrastructure, challenges can be, solved, when we utilize the capital markets, efficiently, because we are talking about, long-term capital in this case, because to fix infrastructure, number one, you need huge capital. Number two, you need longevity, because it has to be, long-term money, not money that you will be expecting to return back over like a 5 years, not even like a 10-year period. We should be looking at like 20, 30-year, bond instruments, for instance, that can help us to fix our infrastructure. And I would say that, in particular, Lagos State has been able to demonstrate with this by coming to the capital markets to get funds, to be, to borrow money that is invested in infrastructure by issuing long-dated, bonds. I reckon that the federal government can also look in that direction and, ensure that, the proceeds of such, money of such bond issuance is used and invested in strictly infrastructure development. If we do this, we will even see more inflows in terms of global investor interest in our markets to come and invest in the markets, because they would have seen that we have the enabling environment in terms of the stock of infrastructure required, to operate seamlessly in the country. And the cost of, doing business in Nigeria is also high, partly because of the poor state of our infrastructure in the country. Many businesses have to generate their electricity themselves, which should not be the case, because it is a lot more expensive compared, to using the existing, sources of energy as we speak. So I reckon fixing infrastructure will lift the Nigerian economy substantially beyond the current level.
Well, there's a lot to talk about, but I guess we just have to stop it here. It's our hope that things will get better moving forward, and Nigerians, so you can see consumers, will have better service delivery at the end of the day. Thank you so much, Tajudeen Ibrahim, Director, Research and Strategy, Chapel Hill Denham Securities, for your time on Business Edge today.
Thank you for having me on.